Hello, good morning, everyone. Welcome to our call as we talk about this important agreement that provides a structural and definite solution for reprofiling our debt structure in the company. Thank you for being with us today despite the short notice so we can explain this a bit. So, to start off here, we really are very honored to present this new debt reprofiling process that's structural and reprofile debt structure in the company with a long duration, cost reduction, and really makes it possible for our transformational plan to take place, making the company more sustainable. So I want to remind you all that when I arrived in August, we prepared this transformation plan. So we can share the slides now, please. So we can skip to the next one. We began in August. Please, next slide. On the 10th of August, we started preparing this transformational plan that included some operational levers and capital structure levers. So we've been providing accountability on this at every quarter, and I understand everyone's anxiety to look at the first quarter release that will take place on the 8th of May. So you can see the clean scenario of these non-recurring expenses that took place and that impacted the results in the third and fourth quarters. But this was a reduction that was very massive in personnel, SG&A, and you're going to see the results in the first quarter. We have a reduction in stocks that also provides some relief, allowing us to have significant liquidity, 3.5 billion at the end of the year. We closed 55 stores, and the recovery plan was able to recover the other stores. And adjusting the DCs, we were able to sublet 4 DCs with some idle capacity, and now we also have 10 more ones that will be able to return or sublet. And also the major penetration of services evolving a lot, contributing to the gross margins and also the growth of our buy now, pay later structure, the crediário that provides even more results throughout 2024, and the retail media that will also help us a lot. But today we're talking about the capital structure. And ever since the beginning, we had a clear objective to have this new profile for our debts and liability management, increase duration, and reduce the cost of capital. And this has been going on as a process ever since I arrived, and we're trying to find a definite solution. Moving to the next slide, we were able to have join us on the same side of the table. So, really having a consistent plan and execution that was consistent, which justifies and gives us the basis to think about something that's really long term. And we were able to advance a lot with this negotiation. And instead of just having occasional agreements that solve short term problems, and then we'd have to move on to the discussion with a new agreement, and that removes the focus from the management, creating this perception that the market has this wrong perception. They're not aware of the size of the support we have from the banks, and we were able to sign an agreement with creditors that addresses the entire company debt, so 4.1 billion reais, and these are the 4 series of debentures plus CCB that we were able to issue together with the banks, and we were able to uh, increase the average term from 22 to 72 months, and we were able to reduce the cost 5 percentage points. So I wanted to mention that this advance in the operational levers in the transformational plan has been rigorously on time, on track with these levers and these initiatives to increase the operational capacity, which allowed us to have a conversation on reprofiling and liability management from a structural perspective with the support from our main creditors. This is very material, and an improvement in our cash flow would be 4.3 billion reais in the next 4 years. So in 2024, we bring in a gain of over 1.5 billion reais, and we have a lack of the principal amounts and interest rates that's higher than 2 years, which also helps a lot with the reduction of costs, leading to savings and also the spread in the CDI. So it's important to mention also that it's a restrictive period. And by what we notice, this is very unique. We start off with pre-approval process, and we have the CCBs and the debentures that do not in any way impact the company's operation. So I think you can see the limited scope, normal life, without an impact on customers. And actually, the relief on the cash flow will provide the company with even more negotiation and negotiations with suppliers and really take advantage of the business opportunities that appear. We have the seasonality of the second semester with anticipation of the purchases from the Black Friday. We need to consider the drought in Manaus and maybe anticipate a bit of air conditioning, etc. So this really leads to tranquility to focus on the operational plan in the company and the transformation of the company. And obviously, last but not least, the fifth point, which is preserving value to creditors. So we actually have been discussing market level interest with actual guarantees and a unanimous condition to all of our creditors, and we are very fair also with the company and creditors overall. So next slide, please. Here we're getting into maybe what is the most important image of the presentation. Um, so the graph maybe is worth more than 1,000 words, but the truth is transformational. So we had 1.5 billion to pay in 2024, over 800 million to pay in 2025, 900 million in 2026, and another 1.5 billion in 27. So the company would have this wall at every year, and each lever releasing cash would be consuming this result by the amortization we had in our debt profiling. And we were able to solve this so that the company could really have the necessary capacity to execute this transformational plan and really generate value with higher EBITDA, recovering growth, and recovering its market positioning, taking advantage of this leadership in the home appliances, electronics, cell phones, and televisions market. So this is a new reprofiling process on the right side, and you can see how that improves things and transforms things. So all of these limitations were set to 29 and 2030. So it makes it a lot easier for us to have the necessary time to work and have management's focus on the company's operation, whether we like it or not. These debts at every quarter that are really short term required a lot of work from management and treasury as well, searching for sources, working with creditors and banks at all times. And now we're going to be able to work very focused on the operation, cost reduction, a lot of cost reductions for indirect purchases, optimization of the mix, use of advanced analytics in the pricing, a lot of things we can evolve in with the operational levers in the company and delivering a gradual margin improvement quarter over quarter. So we're super happy with these results and really excited as well with what we're going to be delivering in the company's operation. Moving on to the next slide, please. Having said that, we reinforce how we were in the overall creditor base. So the total debt is about 4 billion reais, and here's just the debt of the company that doesn't include the operational credit lines like CDCI with the funding of our buy now pay later and the drawn risk. And so we're talking forfeit processes. So we have 54.5% in the hands of some institutions, some assets as well. But with the partnering banks, we can already have the necessary quorum to start with this approved. So this leads to a total of 4.1 billion, and we are very comfortable from with the opinion of our lawyers, and we have a very frictionless operation without an impact on the company's operations. We can move on, please. Now, as we head to the next slide, how will this end up? Well, we have those 5 instruments the company had before with maturities from the 24th to 27th, and we transform all of them into a single debenture with two series. So series 1, all of the creditors are going to receive 37% of their credit on Series 1, which is 1.5 billion, with a grace period of 24 months and the interest part, and the payments will take place according to the amortization items. So November 26, 10%, November 27, 10%, November 28, another 20%, and 60% in November 29. So this Series 1, 37% of the credits of all of the creditors are going to be left in this Series 1. Series 2, 63% of the credits are here. So 2.6 billion reais, which would be Series 2, where we have this rate of CDI plus 1% and the bullet number 2030, which is principal plus interest. So it's very extensive series, and we have 2 classifications, partners and non-partners. So what's the criteria to be a partner? Well, you have 2 options. You have two possibilities to be a partner, which will allow you to have the equity conversions that we're going to discuss in a bit. The first criteria is creditors that keep the current conditions in lines that are not subject to income tax, to RE, sorry. So being the forfeit, but that allow the creditors to be a partner. So the banks already start off as partners here. Or creditors that allow for new resources in um, conditions to be defined. Um, so this term with the new cash and also the CDI rates to be a partner creditor. So this amount will be distributed among these series. And if you're a partner creditor, you have the right to have an option for conversion in equity in this window between 18 and 36 months. So you already have time for the transformation plan to be complete. We'll expect this to be finished by the end of 24. And so then we'll be restarting this growth cycle in the company. And so we'll be able to capture this value. Then between 18 and 36 months, we'll have the quarterly windows to convert this into equity with 80% of the, so about 20 upon the average price of the last 20 days. So to be two of the main reasons are to capture the upside in the transformational plan. So it's a debenture series with a cost of CDI that's very fair to the company, CDI plus one, and the upside in this conversion that can be captured as well through the equity conversions. So if you go to series three, which is a non-partner, that's just a bullet at the end of November 2030. So moving on to the next slide, we are talking about how this process works. Once again, it's a very simple and fluid process. Negotiations are they're very complex and intense. So as we reach this process, um, looking at the adhesion term with a debenture structure built and agreed upon among parties, we'll start off with an request. Then we have uh, a legal of assessment of this process and verification of all the documentations. Then these processes are we have a lot of comfort from our lawyers that we have no risks of non-approval that can't be explained or solved very quickly. So if everything works well, in 30 days, we'll have these approval of this uh, plan, and then all of the current debentures together with CCPs are converted to this new instrument and this new debenture that was agreed upon among parties. So it's a very fluid and simple process that helps us keep our commitments to suppliers, and we had very positive feedback as well from the credit insurance companies and suppliers. Everyone is very satisfied and excited with the evolution of the transformation plan and now this important step that provides us with the necessary oxygen to continue to focus on our operations and evolve. We have in this process some fragmented financial creditor use. So the focus of using this tool is that it was not operational to try to bring all the financial creditors with smaller fragmented creditors. And so we would have individual creditors as well as companies, and so it would be very fragmented, and we would not be able to work on this operationally. So what we did here was a means to really attach all of these creditors as well and have a single debt for the company, which ensures the operational continuity of the company. On the bottom part, you can just reinforce what we've already discussed in the first slide. It does not affect labor rights or employee rights. It doesn't require monitoring from like a Chapter 11 process. It's not in any way related, and we continue to have access to credit. Banks had very positive feedback, and there's a lot of important upsides for the company and an overall positive perception of this. Of course, and it depends on our capacity to execute the transformation plan in the company, which is our commitment and objective to deliver excellent results in the first quarter and improve this quarter for quarter, completing the transformation of this major company until the end of 24. We can move on to the next slide, please. And then on this last slide here, we reinforce the benefits of this new profile for our debt and liability management. So when we look at the major benefits, the first one is an improvement of 4.3 billion in our cash flow for the next 4 years. Once again, that's very significant for the company. The extension of the duration that goes from 22 to 72 months. Another cost baseline with a reduction of 1.5 percentage points in the cost of the debt, and this new capital structure that improves their capital perspective with new creditors assessing this. And this also brings a lot of flexibility in this relationship with suppliers, insurers, and of course, you have more cash availability in the company. So, in this new cash flow, we generate a lot more safety against possible volatility in the market. From a macro perspective, we can't control this, but we see major global conflicts that could impact the Brazilian economy and the US. And so we also performed many simulations on our model. And here we gain a lot of strength to absorb possible market variations and volatilities. We've been preparing for this scenario, and we were very precise in this, of course, with some categories surprising us. But overall, the macroeconomic is very environment is very limited when it comes to this economic scenario. But here we have a lot more oxygen to absorb these variations, and the company will be a lot more resilient. And of course, you can understand what is really our work, which is having an efficient company that's profitable and that is a specialist player focused on core. So we're really satisfied and happy with this important step we're taking that's in line with our transformation plan. It was already our desire to anticipate this a bit and having this new complete reprofiling of our debt position now with less than 1 year from the transformation plan. So I want to thank you all for your support, and I think this was very important with the work of all of our teams, over 35,000 employees that have been working intensely, delivering results, achieving their goals, and improving the efficiency of the operation. I want to thank you all that, of course, you can send these questions. We have Gabriel receiving all of the questions by email as well. And we are going to be answering these questions live, and the ones that arrive later on will be answered by the RI team. So, Gabriel, do you have any questions to answer already? Thanks, Renato. Thank you, Elcio. Thank you, everyone. Yes, we do have questions. The first question, Renato, is which is the expected timing for the company to certify this, and how much time we have understood for this process to be certified? Okay, thank you. Here, as we mentioned that slide on the timeline, the expectation is 7 days for the uh, verification, plus 30 days for the official validation. But we expect it to really be a very previously approved process by the creditors, a simple process that should take about 37 days, 40 days max to have this official definition of all this. We could have some delays, but this is what we're expecting. Okay, thank you, Renato. Our next question is how the conversion system works to stock, and what's the potential dilution, and what would be the right of preference for shareholders. All right. Do you want to get into details, Alcio? I think it's great if you can also give you your own perspective. Thank you, Renata. Thank you, Gabriel. Well, I just wanted to maybe go back to the slide 6 that talks about the structure a bit, and then we'll talk about this process. So, just to remind you all, this is a transformational process when we look at the cash flows because it eliminates the grace period for the interest and um, principal amounts, and it's fundamental to preserve this cash position. We're talking about 3.4 billion reais in 4 years. It's very substantial, with 1.5 billion only in 2024, the remaining 9 months we have in the year. So it's very transformational. And the exclusive perimeter of 4.1 billion are the debts that the company has that don't involve this very defined specific perimeter. And it's converted into a new debenture. As you can see on the screen, we have Series 1, Series 2, and Series 3. And I want to remind you that Series 2 and 3 have a potential of 103%, and the breakdown between Series 2 and 3 will depend on the conditions of the percentage that will be allocated here. in Series 2. So whoever's going to Series 2, the creditors that have the current conditions and credit lines that are out of the perimeter today of these 4.1, or to have a treatment that is completely fair, the investors that add new cash to the defined conditions. So these are the ones that will have the possibility to have this option for this relation. So it's you have the convertible real estate values. These new dimensions in the second series will be subject to the right of priority or preference to the current shareholders that can choose how to uh, write them off between the launch and the liquidation process. But the plan expects that if they do exercise this right of preference, or the resources from this payment will be used by the company and paid by the company to the creditors and sponsors that will have the capacity to reduce the new debentures in the second series. So the terms of this plan, the right of preference can be uh, considered proportionally with the participation or share of the shareholders that cannot be granted to third parties. Thank you, Elsie, for that explanation. Now, our next question is from, I'm going to read it, it's a little long, but it is really in line with the additional oxygen that the plan brings to the company, leaves some space for the turnaround initiatives, especially in the operational levers. So I think then, Renato, if you could maybe explain this one. What are the main KPIs that we should monitor to understand the evolution of these initiatives, and what we should expect as the evolution of these results quarter over quarter? Okay, thank you. Great question. But now, as we look at the KPIs, we consider a GMV, and this is a specialist player. So our transformation plan, one of the decisions was looking at those categories that are not core. So we had 23 categories that we migrated entirely to 3P. And then we removed the incentive for heavy duty investments in marketing, free freight costs, etc. Um, and so there's an impact in the GMV, and that's especially online. That affects a bit of the logic here. Um, Then we're going to see the GMV for online a little bit smaller. That improves the margins. And then we move on to another indicator, which is the gross margin. So when you look at the GMV, the most important point is the market share and the core categories that you can monitor through JFK or Coffee. And our focus is to protect our market share and the company's leadership in these categories, and even gain some market share points in the core levels. But we want to leave this impact, the activities that have this impact. So first of all, we have the better selection of the SKUs we're purchasing, and a more calculated process. We analyze the results we desire to deliver, um, and also the penetration of these services, which is a strategic KPI. We're really evolving in the penetration of these services offline, and we still have room for improvements. Of course, you're going to see these improvements in the first quarter, but this is going to get better and better every quarter. And online, which is a little more difficult, we started to have an improvement. It was incremental, but it's still very small, and we do have some plans with projects and some investments being made for UX to improve the conversion of the sales services online. And another point that's very important is when we talk about the buy now, pay later, the crediário tool, which is very important. It's a very profitable process at its core, and there's a potential for growth. Here we have two factors. With the current line as it is today, and this current facility, we can really unleash a bit of the volume and grow a bit throughout 24. So you're going to notice some growth in this process throughout 24, but we also took on a commitment with the creditors to have the FIDC credit facility operate. So we're migrating from CDCI to the FIDC, and that's going to really unleash the potential of the buy now pay later, so we can capture a bit more value with a bigger buy now pay later resource for our customers, growing and bringing improved credit. That's the best we have with the frequency rates, and selling a lot more with the elasticity price. Another point that's very important is looking at the layer margin. When you look in the company. Why is that? Well, because remember the focus of the company was on the gross margin when it came to the piece, the margin for which is a proxy of the contribution margin for the financial expenses through less uh, installments for pre-maintenance, more payments upfront in cash or banks, which allows us to have a better margin for more discipline and efficiency in the market by supporting business with 30% better. And we showed this in the fourth quarter, and we continue to search for ways to optimize the marketing efficiency. So we have an M&M's tool to model marketing investments so that we can really calculate what's the best at cost for each category, and if that product makes sense or not to have the marketing investments, and what's the elasticity. We have 2% marketing, how much it can sell more, and what's left in the last line. And then we can really optimize the profitability of each product, which when we add up to this will impact the profitability of the company, and we'll have a lot of upsides throughout 24 with this model. So I think these are the main indicators and highlights you should monitor slowly in the short term, and then we'll have the growth of the core and other things we'll be monitoring. We're going to start disclosing the media as well, which is another indicator that's very important. It's very important potential for the Grupo Casas Bahia. We're starting off slowly this year, but by 25 it's going to become very significant for the company, and we're going to disclose this separately from next year onwards about the actual retail media business. We have an executive that's going to be leading this. We have an important P&L. It's a very high margin, and we already have hundreds of contracts signed for the year that will help provide even more profitability, monetizing all of our ecosystem online and offline. Thank you, Gabriel. I hope I answered the question. That was great, Renato. Now we have another question here that just arrived on the IR email, which is what's the breakdown from the creditors already approved the plan for this perimeter. So if you can remind us about that throughout the presentation, you already mentioned that, and also asked us to reinforce the fact that we want to see if the impact is just for the perimeters. So yeah, 54.5 already come in and approved, so over 50%, which is what the law requires for this quick approval and self-approval. So 54.5%, and so that just considers the financial debts, right? The sixth, seventh, and eighth issuance of these debentures. And so we do not have any other kind of scope. The rest is pretty much normal life, as we had seen in the company with greater flexibility before. Okay, thank you. So just to reinforce this, Renato, these are the financial debts that we consider those 4.1 billion, right? Exactly. So 6th, 7th, 8th, and 9th, plus the CCBs. Okay, perfect. Great. Thank you, Renato. Thank you, Elcio. Our last question here today is what's the impact or if there's a modification in the company's strategy from now on? Great question. There's no impact in the strategy. The strategy continues to be a essential player focused on value creation, profitability, and a commitment to this capital allocation discipline, just placing money where we're actually going to generate value. When we look at our plan, we continue to focus on the transformation operation of the company and also walking hand in hand and evolving a lot with the transformation plan. So when we look at the long term, we should finish the transformation plan till the end of 24. This efficiency gain should be margins, and we'll have sustainable level margins that we expect to drive onwards the fundamentally. We'll start, begin a new growth cycle in the company, and then you have a big focus on CRM, more efficiency in the marketing, structuring project. The only material, we are really focusing on this. Have a base of 100 30 million active. We have a lot of things to work on. Capture a lot of value. So we also brought a new executive that comes with communication, marketing, we have a lot of algorithm to capture more dynamic approach for all companies SKUs. So besides this, we'll have the possibility to open up new stores. Next week we'll be working with a new store in shopping at Ikanduva with a
conhece a
store-in-store
nossa
model.
loja
So
da
if you know
Marginal,
our mega
ela tem um
store
conceito de
at
store in store, a
Marginal,
gente aproveita
there's a
bastante o retail
store-in-store
media ali,
concept that we can really
monetizando o
take
nosso
advantage of
espaço
the
com a
real
indústria, com os mais
retail media
parceiros.
and
A
monetize
gente
their
agora
space
conseguiu
with industry
replicar num modelo
partners.
que
So
é
we can replicate this model
replicável para
to
mais de
really
100 lojas nossas. Pegar uma
apply
loja que
this to
está
over
com 4 mil metros,
100,000
estamos
stores. We
abrindo
have a
uma
shopping
nova
mall
loja
store
já com esse modelo, com a indústria investindo no espaço,
square
fazendo a nossa
meters
marca,
with
seus
the
produtos.
industry
Esse
investing in this
investimento, ele
space
não é
to
só
close the
monetização de
brand and
espaço,
products.
ele acaba
This
criando
is
uma
not only
experiência
about
muito melhor
monetizing
para o
space, but
consumidor,
also
ele
creating a
aumenta ticket
purchase
médio,
experience that's a lot
ele
better for
aumenta a conversão de
consumers.
vendas
It
e com isso
increases the
melhora a
average
margem,
ticket,
tanto para a gente
sales
quanto para o
conversion, that
fornecedor
improves the
passar
margins for
a
us and
investir no
for
produto. Então a gente espera
partnering
replicar isso para
investors.
mais lojas,
So
ao
we
longo do tempo, de
hope
forma
to replicate this
gradativa,
to more
sempre
stores gradually,
incremental, fazendo aos poucos, mas
with an
sempre com um
incremental
pilar que ser
approach,
bastante
and then at the
importante,
end of the day will be
reforçando o
very
nosso
important,
posicionamento de player
reinforcing
especialista com a
our
melhor jornada de compra
positioning as a
online e
specialist
offline que o
player
consumidor quer
with the
comprar um
best
eletrodoméstico,
purchase
comprar uma
journey
televisão, comprar
and
um celular,
experience
comprar um
online and
smartphone.
offline for any kind
Além
of
disso,
real
a
estate.
gente vai ter
Sorry, for any
toda a
kind of
redução nas soluções
home
financeiras, vai ser
appliances,
via cartão
electronics,
crediário,
and
trabalhando com
other
novos produtos
items like
para os
televisions,
nossos
etc. So the Buy Now
clientes
Pay Later will
e
have
também
new
soluções
product
financeiras para os
opportunities
nossos
for our
fornecedores,
customers
principalmente
and also
porque é um dos
financial
nossos
solutions to
fornecedores.
our
Aqui tem
suppliers, especially
bastante
small and
valor nessa
medium
mesa para ser
suppliers,
capturado.
where we
Em
see a lot
menor
of
tempo,
value to be captured.
talvez a gente
So it
um
doesn't
pouco
modify
mais
things,
caixa, a
but
gente
maybe with a
consegue
little
sim
more oxygen, we'll
antecipar
be able
algumas
to
alavancas
actually
e melhorar um
anticipate
pouco os
some of these
resultados.
levers
Mas o cenário
and
está
improve
é
results a
o
bit.
que é, né?
But the
Sem
macro
dúvida alguma.
scenario
A
is
gente
what
tem
it is,
bastante
very
cautela
challenging.
aqui nos
We
compromissos
have to be
assumidos,
very
a gente
cautious about
mantém o
our
nosso nível
commitments
base
taken on,
e,
and
obviamente,
we'll keep
com
our
esse
base
esforço, a
plan,
gente
of course.
conseguiu com
But
esse
with
tempo,
this
a gente conseguiu
necessary
o mais
oxygen and
provável é a
time,
gente pegar um ciclo de
will
melhoria no
be
cenário
most
macro
probable
mais
having
robusto no
a
nosso
cycle
plano,
of
e
improvement
aí
in the
sim
macro
ajuda a
scenario,
gente a
which will
entregar um
boost
bom
up our
ROI
plan
com
and
bons
help us
retornos sobre o
deliver
nosso
a great
capital, que é o
ROIC
nosso
and a great
compromisso, é
spread
sempre
on
chegar.
our cost of capital as well,
Estamos muito
which is our
animados, estamos
commitment
muito
to
fera com a
achieve.
estratégia da
So we're
companhia
very excited.
e
It doesn't change
continuamos
the company
aqui
strategy, and we
muito
continue
felizes e focados
to
no
be
cenário
really
potencial
happy and
operacional da
focused on
companhia.
the company's operational transformation.
Não tem
Thank you, Renato. We have no other questions, so we just wanted to also clarify that all of the questions that come in throughout the day will be answered by email or any other channel we have provided to you for contact information. So I want to pass
Tá
this
bom.
on to your final
Gente,
remarks
acho
so we
que,
can
de
end the
novo, né?
call.
A
Well,
gente ainda
guys,
tem muitos
once again,
objetivos aqui no nosso
we still
plano
have
para
a lot of
alcançar. Isso é
objectives here
claro
in
para
our
todo
operational
mundo. Nós não
plan.
estamos nem
This
na
is clear to
metade
everyone.
da
We're not even
transformação operacional da
halfway
companhia. A
into
gente
this
divulgou lá
operational
no quarto tri
transformation
falando
process, and
35%.
we
A
disclosed
evolução é
35% in the fourth
gradativa,
quarter, but
mês a mês,
this evolution is
trimestre a trimestre,
gradual, month
mas
after
estamos
month,
muito
quarter over
confiantes.
quarter.
Acho que esse
But we're really
acordo que a
confident.
gente fez no
And
reprofilhamento de
I
dívida é um
think this
passo
agreement
muito
with
importante
reprofiling of
e que
debt is an
permite a
important
gente ter
step,
mais foco e tentar
and it
acelerar
allows
algumas
us to have
milestones
even more
do plano
focus and
operacional da
accelerate
companhia.
some
Acho que
milestones
à
in the
medida que a
operational
gente
plan for the
avança
company.
com o plano
So
de
as we
transformação,
advance more and
esse
more in this
cenário
transformation
macro
plan
ainda
scenario,
desafiador, mas a gente prepara a
which is still
companhia para um ciclo
challenging,
de crescimento
but we're going
sustentável.
to be
Então a gente
preparing the
espera até
company
o
for a
final do ano
sustainable
ter
cycle
uma
of growth.
companhia
So we
já
hope
com
that by the end
uma
of the year
margem
we'll
EBITDA
have a company that's
muito mais
already
relevante,
keeping an
uma
EBITDA
margem
margin that's a
LAIR
lot more relevant
importante,
and
um
a
bom
layer margin
fluxo de
that's also
caixa.
very
Vamos ver,
significant,
obviamente, o
a
fluxo de
good
caixa
cash
ficou
flow. You're
bastante
going to see
positivo,
this
mas a
cash
gente quer ter
flow
o fluxo de caixa já
very
preparado
positive. We want to have
lá
the
para
cash flow
frente, para quando a gente
prepared
começar,
up ahead
voltar a pagar os juros,
when
voltar a
we
pagar
start
principal
paying
e
interest
a
again
gente
and
ter
principals,
realmente uma
that we
companhia
can really
sustentável
have
aqui.
a
Estamos
company
otimistas
that's
com o futuro,
sustainable here. We're
cientes
optimistic with
dos
the future,
desafios que temos à
and
mesa,
we are aware of
cientes
the
do
challenges we have
desafio que é
ahead
um negócio de
and
varejo
aware of the
dessa
challenges we
magnitude
have in the
num
retail
mercado
market,
desafiador e
in a market
vertical.
that is
Então
so
ninguém aqui
challenging
tem
as it is. So no
a
one
crença
here
de que está
has
fácil.
the
A gente
belief
sabe
that
das
it's easy.
dificuldades,
We
está
know the
ciente delas e
challenges,
sabe do
we
nosso
are aware of
compromisso
the
de estar todo dia
challenges, and
buscando
we are aware
mais
of our
redução de
commitment
custo,
to
mais
search for
eficiência
more
operacional,
cost
para ter uma
reductions and
companhia bastante
operational efficiency,
austera, que
to have
ganha
a
com a
company
escala
with
e que
major
tem,
austerity
sim,
that
uma
gain
base com crescimento sustentável.
scale
Esse crescimento traz
and
um ganho
has
de
a
escala
base with
importante,
sustainable growth. This
então, sim,
brings
temos uma
important skill
visão
gains,
de
and
fazer um crescimento
this
lá no
gives us
final.
the
Temos
vision of
clareza
a
aqui do nosso
growth up
compromisso,
ahead.
clareza do
So
nosso
we're
propósito.
clear on
E, de
our
novo,
commitment
queria
and our purpose,
agradecer
and I
todos os
want to take advantage
stakeholders,
of
né?
this
Os
opportunity to once again
nossos
thank all of our
colaboradores, mais de
stakeholders,
36
our
mil pessoas que trabalham
employees,
duro
over
todo dia
35,000
nas
people
nossas
that work
lojas,
hard every day
parcedeiros, nos nossos
in our
escritórios
stores, in our
e
DCs,
também
in our
os
offices, and also the suppliers that have been great partners, the insurance companies, the banks, the creditors, that allowed us to reach this point and take on this important step. And now we're starting this new phase in our delivery quarter over quarter with the operational evolution of the company. And that's where we're going to start changing the market perception and start reaping some benefits of the transformation being made in the company. Thank you all so much. Have a great day and an excellent week. And we'll be available to clarify any other questions on our channels for communication with investors to clarify any other future questions we may have. Thank you all. Have a great day.